In this video, I am going to show you the exact investments I made that turned $35,000 into over $1 million in 12 months after I quit my banking job. I am going to show you the specific stocks, why I chose them, exactly how I moved my money through each one, and at the end, I will show you the steps you can take right now if you are serious about building real wealth through investing. Stay until the end, because the last section could genuinely change how you think about your money forever. My name is Creed Graves. I was a banker, and this is exactly what happened. I want to start by taking you back to where this all began, because I think the context matters. I did not grow up wealthy. I did not have a trust fund or a family network that opened doors for me. I worked my way into banking because I was genuinely fascinated by money and how it worked. And for a long time, I told myself that being inside the system was enough, that having a stable job, a salary, and a pension plan was the smart and responsible path. And in many ways, it was. But there was always something sitting in the back of my mind telling me I was capable of more. The thing about working in a bank is that you see things most ordinary people never see. You see how wealth actually moves. You see how the people at the top of the financial system think about capital differently from everyone else. You see the difference between people who work for money and people whose money works for them. And the longer I sat inside that system, the more I understood that the salary I was earning was never going to be the thing that changed my life. It was comfortable, but comfort is not freedom. I spent years inside the banking system, processing other people's money every single day. I watched clients build serious wealth. I understood how capital moved, how markets behaved, how smart money positioned itself before the rest of the world caught on. And every month I collected the same salary going nowhere. The day I decided to quit was not dramatic. I was sitting at my desk one Tuesday and I looked around and I realized I had been using my knowledge to build everyone else's future but my own. That was the last day I worked for someone else. I walked out with $35,000 saved. That was everything I had. And I had a plan. Now, let me be clear about what I did before I invested a single dollar, because this is where most people get it wrong. They see a stock going up and they jump in without understanding why it is moving. That is not investing. That is gambling. What I did was go back to the same analytical discipline I had applied every day in my banking career, and I pointed it at my own money for the first time. The first thing I did was study the macro environment, not the news headlines, not what people were shouting about on social media, the actual underlying economic data. Where was institutional money flowing? What sectors were showing accelerating revenue growth? Where were the biggest companies in the world quietly spending their capital? Because wherever the biggest companies are spending, the opportunity usually follows. This was the period when artificial intelligence was beginning to reshape the entire technology landscape in a way that most ordinary investors had not yet fully understood. The infrastructure required to run AI at scale was enormous. The chips, the data centers, the software platforms, the processing power, all of that demand had to go somewhere. And I could see from the data that the market had not yet fully priced in the scale of what was coming. I identified two positions that the research kept pointing me back to. NVIDIA first, and then AppLovin. Let me tell you exactly what I saw in each one and why I moved when I did. My first move was NVIDIA. I put in the full $35,000. I did not split it or hold back. I had done the research, I understood the thesis, and I had conviction. When you have genuine conviction backed by real analysis, you commit. That is one of the most important lessons my banking career taught me. Hesitation is expensive. NVIDIA was the clearest opportunity I could see at that moment. Every major AI model being built anywhere in the world ran on NVIDIA chips. OpenAI, Google, Meta, Amazon, Microsoft. Every single one of them was spending billions of dollars on NVIDIA hardware to power their AI development. The demand was not slowing down. It was accelerating every single quarter. The earnings were beating expectations. The revenue was growing at a rate that very few companies in the history of the stock market had ever sustained. And yet, when I looked at where the stock was trading relative to what I could see building in the underlying business, I could see that the market had not yet caught up. In 2023, NVIDIA went on to become the single best performing stock in the entire S&P 500, gaining 239% that year. My $35,000 had grown to over $118,000 on the back of that run. I took my profits cleanly and I began preparing for the next move. Because in investing, the money you make on one trade is only as powerful as what you do with it next. That next move was AppLovin, and this is the position that took everything to a completely different level. Most people had never heard of AppLovin at the time I got in. It did not have the brand recognition of NVIDIA or the media coverage of some of the bigger technology names. But that is actually part of what made it such a powerful opportunity. When the crowd has not yet found something, the price has not yet reflected its true potential. And my research was telling me very clearly that AppLovin was significantly undervalued relative to what it was building. AppLovin ran an AI-powered advertising technology platform designed specifically for mobile app developers. It helped companies find new users, grow their audiences, and monetize their apps more effectively. The core product was called Axon 2, and it was an AI engine that was outperforming every competitor in its space by a significant margin. The revenue growth was explosive. The profit margins were expanding rapidly, the earnings were accelerating quarter after quarter, and the broader market still had not fully woken up to what this company was becoming. I took everything I had made from NVIDIA, all $118,000, and I positioned myself fully in AppLovin. I had done the work, I understood the business, I understood the market opportunity, and I was prepared to be patient while the thesis played out. What happened next was one of the most extraordinary stock performances in recent market history. In 2024, AppLovin finished the year up 713%. That is not a typo. 713% in a single calendar year. It became the best performing stock in the entire U.S. large cap market for that year. Analysts who had ignored it were suddenly writing about it everywhere. Institutional money that had been sitting on the sidelines came pouring in. The stock went on a run that rewarded everyone who had the conviction and the patience to be positioned before the crowd arrived. I monitored it every single day. I tracked the earnings releases, the revenue data, the competitive landscape, the broader market conditions around it. I watched for any sign that the fundamental thesis was weakening, and when the data finally told me that the move was mature, that the risk-reward balance had shifted, I sold. Not out of fear, not out of impatience, not out of greed hoping for one more leg higher. At the exact moment my research told me it was time to protect what I had built. When I added everything up, I had crossed $1 million. 12 months after walking away from my banking job with $35,000 to my name. I want to take a moment here to talk about something that does not get discussed enough in these kinds of stories. The emotional side of investing. Because the numbers are one thing, but the psychology is another entirely. There were moments during that 12 months where I questioned myself, where the market moved against me temporarily, and I had to sit with the discomfort of watching my account value drop before it recovered, where people around me thought I had made a mistake leaving a stable job to trade stocks, where the silence of not having a salary coming in every month felt heavy. None of that was easy, but every time I felt that pressure, I went back to my research. I went back to the data, and the data kept telling me the same thing. Stay in the position. Trust the work you did. Do not let short-term noise override a long-term thesis. That discipline is what separates investors who build real wealth from investors who chase headlines and end up selling at the bottom out of panic. It is not the most exciting thing to talk about, but it is genuinely the thing that made the difference for me. Now here's what I want you to take from this. If you are currently working and building your own investment journey, the AI revolution is not finished. It is still in its early stages. NVIDIA and AppLovin have already made enormous moves, but the underlying structural shift they represent is still playing out across the entire global economy. The companies sitting at the center of AI infrastructure, AI software, and AI applications are still where serious long-term wealth is being built. The opportunity has not closed. It has evolved. And understanding where it is evolving to is exactly the kind of research that creates the next set of significant returns. The second thing I want you to take is the importance of spreading your capital intelligently. Do not put everything into a single position unless your conviction and your research genuinely justify it. Build positions across the strongest players in the sector you believe in. That way, one unexpected earnings miss or one piece of bad news does not wipe out everything you have built. Third, learn to read data before the crowd does. Most retail investors wait until something is already on the front page of financial news before they buy. By that point, the easy money has already been made. The real opportunity is in identifying what is building before it becomes a headline. Follow earnings acceleration. Follow revenue growth trajectories. Follow where the biggest companies in the world are quietly spending their capital. That is your roadmap. And fourth, master your exit strategy. This is the thing most people never talk about, and it is just as important as picking the right stock in the first place. Know in advance what conditions would tell you it is time to take profits. Do not hold on out of greed, hoping for 1 more percent. And do not panic sell at the first sign of volatility. Have a plan going in and execute it with discipline when the time comes. These 4 principles, conviction backed by research, intelligent diversification, reading data ahead of the crowd, and disciplined exits, are what turned $35,000 into over $1 million in 12 months. They are not complicated, but they require consistency, patience, and the willingness to do the work that most people are not prepared to do. Before I close, I have to be completely straight with you, because I take this seriously, and I think you deserve honesty. My results came from years of professional financial experience inside the banking industry, deep research conducted over many months, and calculated risk management applied at every stage. This is my personal story. It reflects my specific background, my specific preparation, and the specific market conditions that existed during that period. It is not a guarantee or a promise of the same outcome for you. Markets carry real and significant risk. Stocks go down as well as up. Capital can be lost. No result in investing is ever certain. This video is for educational and entertainment purposes only. It is not financial advice. It is not a recommendation to buy or sell any specific stock or security. Before making any investment decisions of your own, please conduct thorough independent research and speak with a qualified financial advisor who understands your personal situation. Never invest money you cannot afford to lose. I am sharing this story because I believe in financial education. I believe that understanding how money and markets actually work is one of the most powerful things any person can do for their own future. But knowledge applied without proper research and risk management is dangerous. So please take what is useful from this video and apply it responsibly. If this video gave you real value, please hit the like button and subscribe to Creed Graves. Every single week, I break down investing, money, and financial freedom in plain language that actually makes sense. No jargon, no noise. Just honest, practical content for people who are serious about building wealth. Drop a comment below. Are you currently investing in AI stocks? Are you sitting on the sidelines trying to figure out when or how to get started? Tell me exactly where you are in your journey right now. This video is for educational and entertainment purposes only and does not constitute financial advice. Investing involves significant risk, including the potential loss of principal. Past performance is not indicative of future results. Individual results will vary. Always conduct your own independent research and consult a qualified financial professional before making any investment decisions.